to the latest Orion Private Wealth Management newsletter. Since the last video update, I've attended two highly valuable fund manager briefings. Firstly from PIMCO, a fixed interest specialist. PIMCO is a fund manager that operates from the United States but has global operations, and its funds under management are 1.5 trillion US dollars, so very, very substantial indeed. One of the key outcomes from their briefing was that they do not see inflation as a risk in the short term, but will present more of a challenge in the medium to long term. Secondly, I also attended a briefing from APN, which is a property manager operating from Australia. They were exploring what challenges will be presented for the retail property sector when Amazon finally commences operations in Australia. Interesting, their key conclusion was that online sales in Australia for retail shopping at the moment is around about 8%, and they don't see that Amazon will significantly challenge this, and so therefore the retail property market they view will still present good opportunities for investors in the medium and long term. Last week I sent out a newsletter from Shane Oliver, and that's attracted quite a few comments. Shane Oliver was forecasting the Australian dollar to depreciate against the US currency perhaps to below 70 US cents by the end of the year. Other forecasts have even suggested from other managers and analysts that the Australian dollar could depreciate against the US dollar over the next 18 months to be in the low 60s, so quite a significant drop. This of course has implications for the international share portfolio component, and as a consequence I'll be certainly taking this into account with my reviews and portfolio recommendations. Another area that has generated a lot of client inquiries and comment over the last fortnight has been with regards to the bank levy that was introduced to the Parliament by the federal government in the most recent budget. As shareholders, a number of clients have received correspondence expressing concern about the impact of the levy on shareholder value. Generally speaking, this concern is not shared by financial analysts. The levy, which is 0.06%, is applied only to the top 5 banks, and those banks have had a combined profit over the last 12 months in excess of $30 billion. It's also important to note that all Australian deposits up to $250,000 are backed by a government guarantee, and the banks do not pay 1 cent for this guarantee. However, analysts have expressed some concern about the bank's exposure to residential mortgages. Interest rates are likely to remain flat during the course of this year, but will increase at some point in time. And as a downstream impact of this, it's possible that there'll be greater mortgage stress and even defaults for the banks, which will ultimately impact their profitability and therefore shareholder value. However, there's some time before this is expected to eventuate. Finally, an area that has slipped under the radar to some extent has been the fact that ratings agencies have reconfirmed the AAA budget. This is a very positive and very significant outcome, and is as a consequence of what is considered to be a sensible budget that was announced a few weeks ago. I look forward to presenting the next update to you in a fortnight.